Hi, and welcome to this week's Market Insights. The market focus is on Friday, the 5th of September, when the most important economic reports will be released. Traders are going to be watching for UK retail sales, Canada's unemployment rate, and US non-farm payrolls. Each of these events has the potential to drive some sharp moves in major currencies and the markets. So let's take a little bit of a closer look in what to expect. Well, firstly, we've got the UK retail sales. That data comes out, unsurprisingly, on the 5th of September at 9 a.m. GMT +3 and could spark volatility in the British pound. Now, back in June, retail sales rose 0.9% month on month. That was below the forecast of 1.2%, but still a rebound after May's steep 2.8% drop. Year on year, sales were up 1.7% compared with a 1.3% fall in May. Now, last time, weaker than expected data dragged the pound down a little bit. And if the numbers disappoint again, the pound may well come under some more pressure. Okay, next up, and we're going to have a look at Canada's unemployment rate. Again, due on the 5th of September, this time at 3:30 p.m. GMT +3. This release may well trigger some sharp moves in Canadian dollar pairs. Now, the next Bank of Canada rate decision is on the 17th of September, and markets currently don't expect a rate cut, but labour market data could raise some uncertainty. In July, the unemployment rate stayed at 6.9%, slightly better than the 7% forecast, but still very, very close to the 4-year high. The Bank of Canada warned that large supplies of labour, increasing weakness concerns, and Trump's trade policy uncertainty are all risks for the labour market as a whole. The Canadian dollar weakened as unemployment stayed in line with expectations. If August shows higher unemployment, it may support the Canadian currency, but if it falls, the Canadian dollar could well face some pressure. So there is likely to be some movement in the CAD when these figures come out. Okay, now we switch our attention to the US, and 5th of September, of course, at 3:30 p.m. GMT +3, the market will be watching non-farm payrolls and the unemployment rate figures. And this data often sparks volatility, especially ahead of the Federal Reserve's rate decision on the 17th of September. Non-farm payrolls rose by just 73,000 in July, far below the 110,000 forecast. June's figure was also revised sharply lower, from 147,000 to just 14,000. May's number was also cut by a total of 125,000 jobs. Now, altogether, these revisions showed 258,000 fewer jobs than had previously been reported. That points to a faster slowdown in the labour market than we were expecting. Now, after President Trump fired the lead economic data official over the revisions, markets may react more cautiously and possibly more strongly to this release. As for the unemployment rate, it ticked up to 4.2% in July from 4.1% in June, but that was in line with expectations. Last time, weak NFP data pulled the US dollar down. If the numbers disappoint again, the dollar could well face another drop. We're just going to shift our focus slightly and talk about OPEC Plus meetings. Now, the next meeting of OPEC Plus countries is set for the 7th of September. In a virtual meeting on the 3rd of August, the group agreed to raise oil production by 547,000 barrels per day starting in September. Now, this was the final step in rolling back the 2.2 million barrels per day of voluntary production cuts that began in November 2023. Now, the increase aimed to reclaim market share and respond to steady global demand and low oil inventories. However, OPEC Plus has said that it could pause or reverse the production increase if market conditions change. Now, the price of Brent crude fell sharply after the latest OPEC Plus meeting. This time, the group's decision is expected to increase oil market volatility on Monday, the September the 8th. So keep your eyes and ears open for the reports from that meeting. Could have a direct impact on the oil price markets. Okay, and finally this week, just a quick update on global trade tensions. According to Reuters, at the beginning of September, Switzerland plans to finalise a new business offer with Washington to ease tariff situation. This deal will likely include higher defence spending and greater access for US energy interests. As ever with these deals, things can change at the very last minute. So do keep your ears and eyes open for that as well, because as we know, Donald Trump's tariff policies have had some pretty significant impacts on the market. Well, that wraps up this week's market insights. With so many drivers in play, volatility is likely to stay high across the board of major assets. So stay informed. Check out the news and analysis section on the FX Open website for some real-time updates. And as ever, we wish you luck for your trading in the week ahead. Bye for now.